Investor's Edge with Gary Kaltbaum. Straight talk about you and your money. Now from the BizTalk studios, here is Gary Kaltbaum.
And welcome once again to Investor's Edge. I'm Gary Kaltbaum, your host. Hey, thanks for being with us today. Glad you're here, ladies and gentlemen. Happy that you are listening. It's the 17th, Tuesday of September, 2024. Hope you're having a good day. You know, we are an open book here. We tell you as it is, like it is. We don't play footsie with anything. I got to tell you something. You know, we do markets here. We do the economy. We do jobs, unemployment, taxes, deficit spending, scams, shams, corruption, and we do the election big time. But I must tell you, in the last week, and just so you know, I am my own biggest critic in the markets. My own biggest critic. But we have certain rules that always keep us out of trouble. And what we mean by that is, doesn't mean we don't lose money, but we lose very little when we're wrong. It's our number one rule. And unfortunately, sometimes we are quick on the trigger. And sometimes we will sell something with no blood and then watch it skyrocket. I had one of those recently. I don't want to mention the name. I hope you don't mind. But I had one, and what we always do here, we do a post-mortem on everything we do. Everything we do. And the two biggest mistakes I make, and again, let me repeat, we're great at not losing money, losing big. We'll lose. My two biggest mistakes are, number one, not playing certain things that we should have played based on our eyesight. And number two, being too quick on the get out. Giving a little bit more room, or just selling when maybe you just want to. And I had one, and again, please don't ask me. Coming out of this nasty, vicious, ugly correction, we identified, we're very good at identifying where's the strength. And you never know. And I can tell you we bought one that we're down 1.6%. We don't even like being down that much. And then there's one I didn't buy that's up big, and one I sold that's up even bigger. So notice, the only thing that's happened here, I'm down a little bit on one, but I left two on the table. And in short run, pretty damn good. And there's actually a third one. But the best news is, and I was taught this many years ago, in case you don't know, when I started in the business world, I read all these books. You know what the books were about? Nothing to do with the markets, but just on what are the characteristics and traits of being successful. The first book I ever read was by Roger Staubach, who was the quarterback of the Cowboys, but huge real estate guy. It's the first book I ever read. One of the main characteristics of every one of these books that I've read, and of success stories, is be your biggest critic, or somebody else will be your biggest critic. So there isn't a day that goes by. Number one, when I'm doing well, I never pat myself on the back. Only when something occurs. But again, I'm sitting there complaining to you because I got one stock down 1.5% and a couple of stocks I didn't buy. Notice we're not complaining to you, well, I bought this thing, it's down 35%. That ain't ever going to happen. And as we tell you also, when one of the rules of the market Going to the market here was learn how to stay away from big trouble. Learn how to stay away from bear markets. Know what bear markets look like, how they act, how they trade. And when you hear people on TV tell you, you can't time the market, we're letting you know they're full of crap. They just don't work at it. And they're the ones, I was watching one of them today, patting himself on the back. I watched somebody pat themselves on the back because they've been bullish. The problem is they're never bearish. So when we had the 22 bear market down 35%, where growth stocks down 70, that's already forgotten. And if the market crashes next week, get my point? So we're just letting you know, I wanted to start the show with some introspection of moi, because I'm actually PO'd at myself as I watch a couple that got away, and the one I did do is down. Dang it. I forgive myself because the market's been very tough. I know you hear, well, this is going new high ground, that. The market's been tough. We had a meltdown. We had a V-shaped move up sudden. Another meltdown. And a big reversal last Wednesday leading to whatever we got going right now into the Fed tomorrow. And may I state for the record, we get Jay Powell tomorrow, and I know all this talk. We just want you to remember a couple of things because I'm sorry, the people on Wall Street don't give you the right stuff. Number one, the thing that matters most is the actual free market of the 10-year yield, which has gone from 5 down to 3.6 and change. Huge drop for mortgages, huge drop for loans, huge drop cost of capital. So when a corporation floats bonds, they don't have to pay as much. I will tell you, along the curve, everything's been coming down. The only thing that has not come down is the Fed. And the only thing they matter to the markets, leave no doubt, especially when he printed to $9 trillion. But no matter what he does tomorrow, whether the market keeps rallying or gets trashed, whatever he does tomorrow will not affect the economy. It makes me nauseous when I hear he's engineered a soft landing or he's engineered inflation coming down. He hasn't engineered squat. The free markets have done the job. The only thing he's done is cause damage. He's the one that caused the inflation, printing to $9 trillion. And as we have explained to you, the reason why he's Teflon and never gets the blame is because politicians and the media always have to blame politicians. Because politicians, the day after they're elected, start their re-election. And the media is just doofuses. So just a little bit of me, a little bit of tomorrow. I have a guess that they're going to do a half point only because I think they leaked it to the media last week, which that I think turned the market. I think if they do a quarter point, this is just a guess, maybe we sell off, sell the news. But I really don't know. The fact of the matter is the most important part of the equation is the 10-year yield is way, way down. Way, way, way down. And let's hope it stays there. Now, what it will affect when he lowers rates will be your money market rates. So let's say you're getting 5.25 now, it's going to be 5. If he goes a half point, it'll be 4.75. That's about it. It's not going to affect your job. It's not going to affect your industry. It's not going to affect wherever inflation's going to go or deflation. It's certainly not going to affect the New York Giants football team that lost to a woeful Washington football team. And I put it on Twitter, I'd be glad to take the team over. I can't do any worse. And I wouldn't be boring. The coach is just plain old boring when it comes to the offense. I mean, dude, do like a down and out pump it go long, like I used to do in the street, in touch football. Do anything. No, we're going to go a little bit off tackle, and we're going to throw a screen pass, and we're going to throw it out there. Just do anything, man. And that's how we start the show today. In case you don't know, this is Investor's Edge, serious talk on everything that affects you. We'll do the markets, the economy, jobs, unemployment, taxes, deficit spending, scams, shams, corruption, you name it. I think we already said that. We're saying it again. If you do not get this radio show in your city, we'll post it at GaryK.com. We'll also post it on our Twitter feed, which is now X. And if you don't follow us on X, you should. And if you want to email me, all you got to do is be nice. And everybody's been pretty nice, in spite of what I say about the people running for the election. Up next, the markets. We'll segue. What else? This is the one and only Investor's Edge.
Hi, I'm Gary Kaltbaum, host of the nationally syndicated radio show Investor's Edge. We're not just handsome radio people. We manage investors' money for a living, specializing in fee-based discretionary money management. No big commissions, just a fee on the assets that's managed. We also provide a full range of personalized services, including retirement planning, fixed income, and educational needs, all to assist you in achieving your financial goals. Understanding not all individuals have the same needs, we'll carefully evaluate your personal goals to determine a proper investment strategy. If your current approach to investing is not getting you to where you would like to be, call us to make an appointment for a complimentary portfolio review. The number to call is 888-422-5559. That's 888-422-5559. That's 888-422-5559. Investment advisory services offered through Kaltbaum Capital Management.
It's time to switch on the integrator units and get the brain cells working.
You're listening to
Hey, this promises to be fun.
Investor's Edge
The last bastion of quality programming.
with Gary Kaltbaum.
It doesn't get better than this.
And welcome once again to Investor's Edge. So when you look at the final numbers today, you see the Dow was down 15 points. I think it was up 100 and change. I'm looking. Yeah, 41,835. Ooh, that was up 230 today. Only it was down 15. I don't see that as a big biggie because we got tomorrow. The S&P was only up 1. The NASDAQ was up 35, and it was kind of sort of all over the map. The NASDAQ did hit 17. It was up 200, the NASDAQ. Am I correct? Let me make sure. 17,781. That's 153. It was up 188. I didn't even realize that. Finished only up 35. NASDAQ 100 was only up 9. Transport's up 171. That was pretty good. Advanced decline's not bad. Wasn't great. But I will tell you this. Financials, decent day, but off the highs. Economically sensitive stuff, decent day. You know how I always talk about United Rentals was up $29 today. Stock was breaking down last Wednesday, reversed, and is coming back up. That to me is one of my economically sensitive names. What's my second one is Caterpillar, was up 5 and change today. That was breaking down, reversed on last Wednesday, and has gone up from like 335 to 353 in 3 days. Stock's done nothing in 6 months and is off the highs, but definitively better. And why would economically sensitive stocks do better right now? Well, lower interest rates, I guess. That's what usually does it. And we'll just see where it takes us. My only complaint is I bought one that went down, the 2 I left alone, and 1 I sold went up. Welcome to my world. And by the way, I don't usually talk like this, but I figure it's great to tell somebody because I was so PO today. It happens. Not often. And that is that. Anything else stick out? China a little bit better. Chinese stocks trying. Gold pulled back today. I don't see that as a biggie. Oil stocks had a good day. They've been brutalized. They had a good day. I'll look them over later. Managed care HMOs had a bad day. Eli Lilly, because I'm asked about that all the time. Probably don't want to break. A break below 893 would not be good. And I get asked a lot about Eli Lilly, and that's because of the drugs, and it's in the. I mean, it's big stuff, and all we hear every day is these drugs are great because when people lose weight, less diabetes and less other things, maladies you would get from being way overweight. Again, my big worry, and I'm a student of the game, is what happens when you get off of it. If you go back to your eating or doing whatever. So that's a, by the way, valid thought. On any time you're taking something in order. The reason why diets don't work, because most people go off the diets. What you have to do is just make it a life change, and that is of the eating part, what you ingest, and how much you work out. It really is simple. It's called calorie deficiencies. Semiconductors. You know how we tell you most of the time semiconductors lead the market, both up and down? This is one of those moments, not even close. And it's happened before. Nothing's ever 100%. We're letting you know the semis continue to lag. They were trying early in the day. We were up 70 points, finished up 1. NVIDIA still struggling around the 50-day. If NVIDIA breaks above $121, that'll help. But I must tell you, when I scan 80 semiconductor stocks every night, I think about 72 of them look like crap. It's only the big names that are driving the ETFs, the exchange-traded funds, and that's a little bit worrisome. But again, the big story is going to be tomorrow. I think he can move markets. Everybody's waiting with bated breath and on their toes. I hate every bit of it. No one man should, and his whims should have to. You know my stance. Nothing personal. I don't know the man. They've made themselves bigger than they should be and have been more destructive than anything. That'll be 2 o'clock, and the nauseating thing is they do a press conference after, so the markets will be all over the freaking map for that matter of time. I believe September, October, I guess late, sometime in November will be the next one, yippee-yay-yay. And that'll be right after the election. I'm going to have to double check. And that's a little bit of story of today. Economically sensitive names. What we mean like that is building and construction. And they were acting terribly. They were breaking down. And last Wednesday they reversed. And since, no respite. Notice the big word, respite. I used to think the word was called respite. It's respite. I got some news. Oh, not about me. My father may be going home from the hospital tomorrow. That's the good news. The iPhone. We're doubly hearing now Taiwan. An analyst out of Taiwan is reporting that Apple sold an estimated 37 million new iPhone 16 units in its opening weekend, down 12.7% from the first days after last year's iPhone launch. Every big analyst has been yelling and screaming how this is going to be the one. All right. We'll see. My biggest issue with Apple is a stock, and by the way, we just bought it and sold it. I think we made double digits, whatever, in a short period of time. Hey, see, that one I'll pat myself on the back a little. It's trading at over 30 times earnings. They better grow better than they have been. That's all I can say. I'm asked time and time again, what do I think of Warren Buffett selling a ton of his Apple? I don't think anything of it. He had too much, and it became too much of what he had. If you want to be worried about anything Warren Buffett's doing, I'm hearing he's got $300 billion in cash. Up next, what else is going on in the world and in the markets? This is the one and only Investor's Edge.
Listening to
America is talking.
Investor's Edge.
He's got to be pleased with that. The crowd is just on its feet here. He's a Cinderella boy.
With Gary Kaltbaum.
Comes highly recommended. You're going to feel better if you talk to him.
So, I would be surprised if they only did a quarter point tomorrow. I can't even believe I'm even talking about it. I abhor talking about it. Let's move on. Have you been reading about the pagers? In case you do not know, because the media sucks, there is a terrorist group in the north called Hezbollah, the north of Israel, that has been lobbing thousands of missiles and rockets into Israel. Murdered 12 little kids on a soccer field. I think it was 12, just a month or two ago. As you know, the first time I was ever in Israel, went into I think it was 5 or 6 bomb shelters. The last one, the sirens went off. It was nighttime. I was in a restaurant on the beach in Tel Aviv, and I noticed when the sirens went off, a bunch of people went into the bomb shelter that was, I guess, underneath the kitchen or something. But a bunch of people stayed at their tables. And I walked to one of the tables. I see a bunch not going in there. We're the Israelis, the person said to me. So I sat down and ate. Imagine if you lived in D.C. and across the Potomac, somebody was lobbing rockets into D.C. Imagine if you were in El Paso, Texas, and Mexico was lobbing rockets into El Paso. Imagine if from Toronto they were lobbing missiles into Detroit. I think that's about right. What would the United States do? Well, that's what's been going on in Israel for years. And often Israel doesn't even answer it. They just employ the Iron Dome that takes the rockets out of the air. And in case you don't know, I have my own pictures of rockets over my head in the middle of Tel Aviv at 2 p.m. being taken down by the Iron Dome. That's Israel. Well, it seems Israel had had enough. Just so you know, Hezbollah, these scumbags, these animals, could not use phones anymore because they were being found. They moved to pagers. And it turns out the intelligence agency Mossad somehow were able to import those pages to Hezbollah. And in those pagers contained 20 grams of explosive PETN in the batteries. And I guess, I don't know what they were able to do, but they did. There was some remote in there, and the pagers went off, and fingers were blown up, and all that crap. So now there is pager genocide. that Israel's being accused of. Which takes me to Cornell. Cornell suspended a teacher who was out on campus saying the most vile things about Jews and Israel and praising Hamas. Not making this up. He's back teaching at Cornell. A man who praised, a teacher of students at Cornell who praised the murder, the rape, the kidnapping, the putting of the babies in ovens, blowing people up, shooting families in the head and making them watch, kidnapping them and keeping them in tunnels and starving them, and then executing them. Somebody who praised that is teaching at frickin' Cornell University, and the media is not reporting it. Imagine if this person praised the Ku Klux Klan, and the killing and hanging of blacks. Would he be teaching at Cornell still? What the hell is going on? Who the hell are these people running these universities? Do they not give a crap, not just about Jews, but about a person praising terrorists and murderers, and proud of it in front of audiences, and influencing young people? You can go read about it. Ladies and gentlemen, I don't even know what to tell you. I don't even know what to say. We move on. The one thing nobody's talking about on the campaign is debt and deficits. They kind of blow it over. I believe Kamala Harris mentioned it once and lied out her rear end, just like Biden did. And Trump said he's going to lower the deficits. But you know, the line of "fool me once" comes to mind with Trump, because I remember that he promised in his first presidency how easy it was to control spending and debt and deficits, and within a month added like $700 billion to the spending, which, by the way, continues every year and grows every year. So I'm supposed to trust Trump on the debt and deficits? And you know how he says he's going to do it? He's going to sell oil, which is a load of crap. He's going to sell oil and cut the deficits. The only way to cut the deficits is cut the frickin' spending, and it would be simple for President Kaltbaum. Easy. Number one, that $350 billion given to Podesta for climate, taken back. The year 2019, federal spending was $4.4 trillion. This year, $7 trillion. I'd get out the machete on exactly where all that money's going and just roll it back. Not the 4.4. Let's see, 4.2.6. I'd knock out $1 trillion easily. And then I would put a moratorium on raising federal spending for, we'll do 3 years. And let the economy catch up. You know, we once had a $20 trillion economy. We're now $25 trillion, not because of what they're doing in government. It's because of you and I. Us. We the people. And every time we create a dollar, these clowns in D.C. are spending $1.30. And as I said to you, And I couldn't believe it when I saw it. In the month of August, we sent them $307 billion. They spent $688 billion. Now, that should be a headline in every newspaper and in the media, and nobody gives a crap. And when it blows up, and it will, and we told you, we've been saying it for a long time, we don't know when, but it will. And all they're doing right now is getting out another credit card with a higher credit limit to pay for the last one. But when it blows up, they blame each other, and guess who the victims are? We are. So that's going on right now. It's stunning. It's stunning. And then you see things like California now. The legislature now passes a bill to give illegal aliens, migrants, unemployment benefits. What? What? They tried to give them access to home ownership with 0% loans, but in a random act of smarts from the governor there, he vetoed it. What is he going to do about unemployment? Really? Just so you know, these unemployment benefits are all taxpayer dollars. It's amazing the things I'm reading. Up next, what else is going on? This is the one and only Investor's Edge.
You're listening to
What are we waiting for?
Well, what are you waiting for?
1, 2, ready, go.
Action!
Investor's Edge with Gary Kaltbaum.
I do want to mention my thoughts. I know you're reading polls on the election, and there's a poll for everything. And it's so weird because I see polls that say Trump's way ahead. I see polls that she's way ahead, so I don't really pay much attention to them. I'm just letting you know, I think if the election was done today amazingly, with that horrible debate by Trump and some of the crazy crap out of it, he put out a freaking tweet on his social thingamabob. I hate Taylor Swift. I had to verify that. Let's see. Who's the most popular person on Earth right now? Would you say Taylor Swift is in the top 10? Yeah, I would suggest that. And he puts out, I hate Taylor Swift. He's nuts. And his stock's down to $16. Anyway. JP Morgan says don't expect much from stocks for the next decade. An analyst there says because of, I guess he thinks because of growth of valuations, whatever, don't expect much from stocks for the next decade. So I don't know exactly who said it there and really don't care. These are the things we want you to ignore at all times. The next decade? Somebody's telling you what's going to happen 10 years from now? Really? The next decade? I'm trying to get tomorrow right. The next decade? The rich dad, poor dad guy, never met him. Done very well for himself. Has been said, and Harry Dent, who continues to say how many times he's called the markets brilliantly. I'm going to question that. But Doesn't matter. They're calling for major crashes. I mean major. 50, 60%. Complete washouts. I don't want you to listen to that. I saw somebody on TV today, oh, we're going to skyrocket from here. I don't want you to listen to that. We think we've done a good enough job here by interpreting the markets versus predicting the markets. And I would suggest to you, in my humblest of opinions, there's quite the too many variables to think about the next 10 years. And most importantly, and we mean this sincerely, if the market's going to crash, well, there are certain things that have to happen. The S&P, let's use that, would first have to break 5510. A couple of percent below, which is the 50-day moving average. If it never breaks the 50-day, it's impossible for it to crash. It would then have to break 5400, which was the reversal low of last week. No chance of crash if that holds. It will then have to break the 200-day moving average in the long term. Looks about 5180. It would then have to break the 5119 big reversal VIX explosion back in August. It would then have to break the 4953 in April. Now, if it hit 4953, it would be down about 13%. That would not be a crash, and that would not be 50%. They're thinking, let's give it a little room and say 5,600 down to 3,000. Well, you'd have to give back the whole move from last November, which the low was 4,100. You catching my drift? You'd have to break the bear market low of 34.91. Oh, there was a little low before that at 38.08. You catching my drift? I've never understood those type of calls. It seems it's to get headlines. We'll know if the market gets in trouble because we know the markers that get markets in trouble. We know the inflection points where we know the markets will get in trouble. And of course, we also know what stocks are of import and where their short, intermediate, and long-term levels are. And we can go back as far as we want. COVID low was 2191 back in March of 20, I believe. Yeah. Correctamundo. So in case you have heard these people, I'm not saying they're wrong. I hope they're wrong. We're just letting you know we'll be ready. We'll be out. Markets will take us out because of the roadmap of the markets we follow. We have studied every bear market. We constantly study the bear markets in sectors, even when the market's strong. Recently, the oils. Or Walgreens. Talk about a classic bear market. Walgreens stock. So I just wanted to mention this because they're out there. And they're selling books or whatever, and more power to them. Hope they're wrong. We just want to make sure that you have confidence if it ever does occur. You should be tuning into the show. Tomorrow we'll be on the 1 p.m. hour, Fox Business Network. Same time tomorrow for the radio show. And until then, you have a great evening. Drive carefully. When you get home, do like we do. Quite simple. Make sure you hug your family. Make sure you hug your children. They will feel better. You will feel better. I promise. Tomorrow at 2 p.m., Mr. Bubble. Yay. Have a great one, everybody. Take care. Good night.
This has been Investor's Edge with Gary Kaltbaum on BizTalk. To listen to past episodes or to get in contact with Gary, go to GaryK.com. That's GaryK.com.